Thank you for joining us, Mr. Soros.
Pleasure.
Is the financial crisis that we've seen unfolding, particularly on Wall Street over the past few months, coming to an end? Have we seen all the problems?
Well, I think we've had the real scare of a major investment bank going broke, like Bear Stearns, put to rest. So it's the end of a chapter. But you have another chapter or another coming up, which is the effect that the weakening of the financial system will have on the real economy. And that is yet to come. It's just beginning to unfold. The consumers are just beginning to cut back. You have had no rise in unemployment yet. So those are things that are yet to come.
And what will that economic impact be? Will there be a recession?
I think it's almost inevitable that you are going to. We may already be in a recession in retrospect, but you will be certainly in the coming quarters.
How would you rate the response of the U.S. authorities so far? Have the Fed and the Treasury done what needed to be done?
Not at all, because basically, well, the Fed did the right thing in providing liquidity and preventing a collapse that would really endanger the system. So they were right to rescue Bear Stearns.
Did the Fed act quickly enough at the very beginning of the crisis?
No, they did when they had to. They couldn't have done that before. Bear Stearns had to come to them and say, unless you do something, we are broke. Then they could do something, and then they did. And this is in the tradition of central banks. Where they've really totally failed is in recognizing that markets can't be left to their own devices. And this is where I have a totally different theory about financial markets. And this administration, and actually the U.S. administration generally, since 1980...
Would you include Bill Clinton's administration?
Pardon?
Would you include Bill Clinton's administration?
Including the Clinton administration. Ever since 1980, I would say, market fundamentalism became the dominant ideology in America and in the UK. And I date what I call the super bubble to 1980, when Reagan became president and Margaret Thatcher became prime minister. And since then, the idea was that markets should be given the greater scope. And effectively, the regulators abandoned their role, which is to regulate. When you look at this esoteric instrument, credit default swaps, of which there is now $45 trillion worth of contracts outstanding, which is equal to half the U.S. household wealth and 5 times the national debt. And it's totally unregulated, and the counterparties don't know whether their counterparties are good for their commitments. And they won't know it until there are actual defaults.
So do you think the credit default swap market is going to be the next big place where we see a problem?
It's a Damocles sword that's overhanging the financial markets, and is not going to drop until you have the defaults, unless...
So is that part of the reason that we see this continued liquidity squeeze, people not willing to trust their counterparties?
Well, it's a very important element, and I think it was a very important consideration by the Fed that they had to bail out Bear Stearns, because, and JP Morgan had a big interest, because JP Morgan actually is the main factor in the CDS market. They are responsible for something like $16 trillion worth of the 45. And apparently Bear Stearns had about $2.5 trillion of these contracts outstanding. So they could not allow Bear Stearns to cease to be a good counterparty. So
how can it be addressed?
well, it's very simple. You create a clearinghouse or an exchange, and you obligate everyone to register or to transact these contracts through that exchange. And then you know who your counterparties are, and then you have a mechanism for dealing with failure to deliver, and you have margin regulations, so you can regulate the market and eliminate the counterparty risk. When
Is that kind of after-the-fact regulation possible? These contracts are out there already.
I think this is urgently needed right now. And I think a lot of the contracts that were off a market, off the regulated exchange, need to be channeled through regulated exchanges.
If you created a clearinghouse like that, would the government have to back it up with its own money?
There probably would have to be some kind of an insurance, which could be financed from the people who are using the exchange. So there could be a user fee added to the contracts. I mean, this needs to be worked out, but I think it really does need attention. And it's just one example, but it's a glaring example of the kind of regulation that is currently missing.
With solutions like these, and with the rescue of Bear Stearns, shouldn't we be worried about moral hazard? Why should taxpayer money be spent to rescue very wealthy people who took undue risks?
Because the system needs to be preserved. So when the chips are down, the Fed has to rescue whose failure would endanger the system. But then there has to be a price paid for that. And that means that those people who get the benefit of that kind of protection have to pay for it by submitting to regulation. I don't think the financial system needs to be rescued, but I don't think you can prevent a recession. The markets are still living in the hope that the Fed will do whatever it takes to avoid a recession. My contention is that the Fed is not in a position to do that, because through this continued extension of credit, you've reached the outer limits. You can't create more leverage than you already have in the system, and
particularly in America or in the world economy overall.
This is the global financial system, and moreover, we have issued an awful lot of IOUs, and the holders of those IOUs are increasingly reluctant to hold dollars, obligations of the Treasury, government bonds. So there's all kinds of attempts to diversify. That's why you have a flight from the dollar, and that's why you have these sovereign wealth funds, which try to get away from holding government bonds and try to buy real assets, and particularly commodities. So that is behind the commodities boom.